Good afternoon, everybody. Welcome to our Wednesday sales mastery training. My name is Mario Delgadillo out of Dallas, Texas. And today we're going to cover some of the foundations of our compensation plan. We're going to spend some time going over our comp grid. And towards the end, we'll have a section for you guys to ask some questions as well. So take good notes. If you are able, just like always, please keep your camera on. But without further ado, I want to actually just start off by saying this. Part of the reason why we started Finline Financial however many years ago was because we had been, myself and Wences, and I know Maritza as well, had been in a number of different, I'm putting my headphones on, a number of different IMOs. And for one reason or another, it just always felt like it was foggy when it came to compensation. I think I know what I make, but I'm not sure. And then, well, once I found out what I made, then I asked, why did I make this? And, one thing that stuck out to me was that as Wences and I would go and we'd interview different IMOs and we'd meet with different leaders, everybody was always so reluctant to talk about what the brokerage made, right? What the IMO made. And so whenever we decided to put together the Finline agency, we decided that that's not who we were going to be, right? We were going to be the agency that was as transparent as possible. From the beginning, we've always shared with people what we make, and there's a rational reason why we pay out what we pay out. And I think that that's been something that a lot of people have always thought was refreshing. And it's the reason we've been able to retain people, because at the end of the day, guys, and I speak for all three of our leaders who are here today, we're not here to do anything but help you make money. We're not here to do anything besides helping you change your life and put as much money in your bank account as possible. And in fact, Mr. Navarro taught me that a long time ago. We were trying to do one of our many adventures that we did in the past, and I remember one time he said, man, would you rather make 100% of nothing or 40% of 100 million? And I said, wow, 40% of 100 million sounds a lot better than 100% of nothing. He said, exactly. Cut people in, give people the opportunity to make money. And so that's where we started. We went out and we built our compensation plan. In fact, Mr. Wences Navarro, our CMO, here at the Finline Agency, has been hired and contracted over the years multiple times to help insurance company actually build compensation plans. So I'm not sure if you guys know that. So what I want to do is, Wences, I'm going to pull up the compensation plan to start with, just to begin with, and I'll share that on the screen, allow you to kind of go through that.
Yep.
And then from there, while I do that, maybe kind of I know there's some people in here that are kind of new that maybe haven't had as much interaction. Maybe give a quick bio on your background and how you got here in the insurance industry, and then we'll jump into it.
Yeah, for sure. What's up, Finliners? But we'll get started. A long time ago. So 2007, I got introduced to life insurance, and I was with a big company called World Financial Group. So some of you guys, I'm sure that you've heard of it. Some at some point in your career, you're going to hear about it. And it was more of a recruiting-driven environment. So I spent some time there, and I learned a lot of the things that I'm going to share with you. I learned since way back then, but things have changed. So the insurance world has changed, right? Just like everything else. And one thing I noticed since way back then is that most people, Mario's going to laugh, most people will, if they're honest, if they've been in the industry for 10 years, 15 years, most people don't understand how they get paid in insurance. And there's a reason for that, right? It's because it's super complicated, like what we're about to show you. I kind of figured out how to dumb it down, make it easier to understand. But at the end of the day, we have a mutual friend that at the time when he passed away last year, but when we met with him the last time, we asked him, we said, hey, do you have like a way to track something that we can copy, like a spreadsheet or a system that we can track all of our commissions? And he goes, oh man, I've been doing this for 27 years and I gave up a long time ago. He goes, I just look at the commissions and that's it. Like, I don't know where they came from or remember that? He goes,
Absolutely.
This is someone who's been in the business for 27 years that makes a ton of money. right? So he just lost track of customers and percentages.
Wasn't it closer to like 40?
40,
He was in the industry, yeah, for a long time.
long time. So if someone like that doesn't fully understand it, then yeah, like we're hopeless, right? But that's on a bigger scale. I mean, he had thousands and thousands of policies in his book of business, right? So, but it's not impossible to understand, right, how you get paid. And we're gonna break it down here. We figured out how to do it simple. But when I first started back then, I didn't know anything. So, I thought I started at 30% commission level. There are still companies right now that are still paying out 30% to new agents, right? And then more recently, there's been like this misconception that a company can pay out 150, 160% commissions. So I want to clear that up today because you can claim that, but it's not really true. And I'm going to show you that in a minute, right? So I've seen everything. So life insurance has changed. It's gone a long way. And just throughout the years, I've worked with National Life Group internally. So I was with National Life Group back in 2011. I went when they purchased LSW, the company LSW, which is the product we sell now. I helped them expand to the West Coast, and now they're like everybody sells LSW. Back then, it was a small conservative company out of Vermont, and now they're huge, right? And now we have companies like F&G and AIG, which changed the names now, but we have some really good products, right? So life insurance it sells itself once you get on the appointment. It kind of sells itself, right? So cool. So we'll start out because I want to keep this brief, but I want you to really understand the compensation and then kind of the psychology behind, why we pay out the way we pay out. Because once you become a licensed insurance agent, I'm sure you guys get a bunch of phone calls from a bunch of agencies, and they all say the same thing. Oh, we pay top commission, right? So I want you to understand this. So here with Finline, we said, we're not in 2007 anymore. So you can't really get away with starting agents at 30%. You shouldn't, right? Especially if an agent is kind of doing this to supplement their income significantly or full time, right? You can't do that. So the lowest commission here is 70%, right? So 70% is the lowest, and that's just an agent, right? So to go from an agent just means it's just you, right? The minute you start recruiting, you get here it says the minute you put one person on your team, you're already in a leadership position, right? So hold on, let me see. Can't see starting. Oh yeah, for sure. No, there are plenty of companies still starting people out at 35, but completely different model. So here 70%. So this here is our appointment is your appointment as an agent is not with us as an agency, with which a lot of companies do that to have more control of the commission. Your appointment is directly to the carrier. Okay. So here, once you start moving up in the manager ranks, right, all the way up to senior vice president, that commission all the way up, if you go all the way to up 110, that gets paid to you directly by the carrier. Okay, so there's a big difference between the way we do it, being direct to carrier, and being appointed, to the agency, because those commissions are going to come directly to you, right? So here, if you compare this to anybody else's, production requirements to move up in ranks, right, and management ranks, this is cakewalk compared to anything out there. And Mario's seen most of them out there, so this is very easy to do. So at 110, I'm going to show you why 110 is sometimes comparable to some companies, what they call 150. Okay, so can you go click on the grid, Mario?
Do you want me to make you host, brother, or what do you
I
want me
think
to do?
you should, because I was going to pull it up
Okay.
here, so kind of click around. So
There you go. Got you.
Okay, cool. All right, so I'm going to share my screen then. Can I think you gotta stop sharing so I can share.
I did. I stopped it.
You did, okay. All right, let me know when you can see my screen.
We got it.
All right, cool. All right, so now that you saw the ranks, and you'll see them here on the left side. So I'm going to show you as a point of reference. Every agency, every IMO has what they call their top comp. Okay, so our top comp, we call it a 110 because it's a true 110. So 110 at senior vice president, right? So I'll give you an example. A lot of you are writing the pad setter with F&G. Okay, so we as an agency get paid a percentage. We take, obviously off the top, we take a percentage to keep the lights on, to keep growing the business. And we pay out a 105 here as our top compensation. So the 110 equals 105. So this is all you have to do when you're wondering what product and how much do I get paid. You come here and you say 110, and then you go, okay, cool. At the 110, I get 105. If I'm at 90, I get 90%, right? If I'm at 100, I get 100. Okay, so it's that simple. You just go here and then you go here. You look for the product. So if you're looking at LSW, for example, here, the Flex Life, which is the one we use the most, the IUL, 110 equals 105. Now, if we really wanted to, we could say we're a 150 or a 150 agency, and then you do minus, what would that be? To equal, if you wanted to pay out 105, we go, you're a 150, but you subtract 45 when you sell this particular product. So here you don't. We don't want to play those games. So it's 110, you subtract 5. We could say we're a 140 and say, oh, just subtract 35 on this particular product, right? So
Do you guys get what he's saying there, guys? Really important.
it's
You'll
important.
run into agents and they'll say, "Oh, I make 150." But they're just screwing with him because they still make a 105 on the IUL.
Still 105, yeah.
So you make 110, but you're still making the exact same as them on this particular product, is what he's saying. So they just do that to get people to believe they're making more money when they're really not.
So believe it or not, I just ran an agency out there right now that's promoting 200%. You're gonna hear about it and you're gonna go, wow, that's a lot. That's like double what I make. It's not. So what you do is they go, we have it's 200, but if you're gonna write a pad setter IUL with F&G, you subtract 95. So it's like, okay, so I'm at 200 minus 95. I'm really at 105, right? So that they just started promoting it big time on social media all over the place, right? Because they just figured we're going to use that to get the eyeballs, right? But it's misleading. That's my point, right? So here, this is what you're going to do. All you do is you find your comp on the left side here of the grid, right? So 110. So if you're looking at AIG, for example, you look at the 110, and the quality of life product, it's a 95, right? So even though you're at 110, it doesn't mean you get 110, you get 95. And that's because every carrier pays different. Every carrier has different products and every product pays different, right? So it gets a little bit confusing, but it's not that. This is the easy way to do it. If you reference this, you go, okay, cool, I'm going to get 110. That means I'm getting 95 on this particular product and in this particular age range, right? So it also ranges between, there's a difference between the age range also. So just keep that in mind. Because a lot of questions are, hey, I was supposed to get 95. Well, no, how old is your client, right? Depends on that as well. So here, this is our comp plan, and we update it as we get an increases, as we make changes. We'll always keep it updated. But I'll give you an example here, right, of how confusing this can get. LSW, this is also broken down into states, right? So I mean, sometimes it get crazy, but not that complicated. Just know if you're here, if you want to make yourself feel better compared to the 200, just say I make 200 and subtract 95, right? But it's a 10. So let me see. Let me go now. So we get paid. There's another thing that I see that a lot of agents don't understand, just in the industry in general, right? We get paid to sell life insurance primarily, right? So we get paid on an IUL, for example, we get paid based on the target premium, right? And that target premium, if you've noticed, it changes based on how much life insurance you're selling, right? So if you do an illustration and you start out with a $500,000 face amount, and then you go, hey, wait, hold on, the cash value is not adding fast enough. You can sell 250 and your commission changes. So it could be a total 500, $250,000 plus a $250,000 term, and it's going to change based on the insurance amount, right? So, I mean, we teach how to properly structure policies, not based on the agent commission, because we can easily, if somebody gives me a $500 budget, I can easily just increase the amount of insurance, make more commission because the target premium is going to be higher, but that is going to affect the client's cash value, right? So it always depends on the situation. That's what I always tell people. It depends on the situation, and keep it simple. I can always keep it very simple. If the purpose of the policy is to increase cash value, then I go fit, right? And if the purpose of the policy is to get a lot of insurance, then we'll figure that out differently, right? So let me go now. I say that because the next grid, this one looks great, but the next one we're going to show you with Guardian, I'll tell you why the numbers look lower. So let me click on that one here. Can you see it?
Look at everybody's paying attention now.
I know.
All the ears went up.
I know. All right. So can you see it?
Yeah, that's clear.
Okay. So check this out. So having said that, we get paid to sell insurance. If you notice that you've done an illustration, you've noticed that a lot of times with IULs and even with whole life, same thing, same situation. The lower the death benefit you sell, so if your client commits to $1,000 a month and you give them $1 million policy, more money is gonna go into the cost of insurance, right? Because there's a cost to insure that individual, and less money would go towards the cash value building up. So when you see a company paid less, you should automatically think that the cash value is going to be more, because usually when you see the cash value in the first couple of years, not usually, all the time, if it's higher, that means we're getting paid less as an agent, because the company is telling you, hey, if you're willing to give up part of your commission in the early years, then we'll put that into the available cash value, because we didn't pay it out to you, so we can make it available to the client. Okay, so that's super important to understand. So if you give up your commission, if you're willing to take less commission, then we will make more cash value available to your client. And in the beginning, for most agents, that's a hard one to swallow, because you go, man, I got 2 deals going on this month, so I have to pay the bills. And I get it, right? We've all been there. But let me tell you, if you do the right thing by the client, and Maritza's gonna agree with this one, you do the right thing, you'll get more referrals, right? And I actually point this out to the clients, right? I show them, because I need them to know. I'm gonna ask for referrals. I want them to know, like, hey, this is the friends and family like hookup, the way I'm designing your policy, right? Because I want to do the right thing. My job is hard, so I'd appreciate it if I could get some referrals, because I'm doing the right thing. And I sometimes even tell them, hey, I'm cutting my commission by 50% to make this work for you, right? So I say that because the Guardian compensation plan here, compared to the other ones we just saw, is going to look lower, and it is lower. So 110 is a 55% comp. But here's the thing, and you guys will agree with this, Mario and Maritza, the size of the deal is going to be way bigger, because your client is going to look at the cash value. And you can say this, you can look them in the eye and say, hey, you're literally taking your money from your left pocket and you're putting it into your right pocket, because you're still going to have access to it. But
Yeah.
now the money in your right pocket, it was earning 0 interest. So sitting in your bank, making no money. Now you're taking it from your left pocket, you're putting it into your right pocket, and you're going to make, the guarantees that come with a whole life policy, right? And you're not going to lose liquidity. So you're not going to lose access to the money, which is the key. So your policies, that's why you guys see that, Maritza's policies are not your usual $300 a month or $500 a month. They're like, I don't know, what's the average, Maritza? What would you say the average is?
About 1,000.
About 1,000, right? So they're like 3 times the average. So don't worry about, oh, this is lower compensation, because it more than makes up for it when you're doing deals that are 3 times the size, right? And not to mention the referrals that come with it, and you're doing the right thing for the client. So it's I get it. It's a tough number to look at when you go, oh man, over here I'm getting 105. This is 55. It's a big difference, but no, trust me, it makes a big difference when you're selling the product and you can say, hey, check it out, you put this much in, but this much is available like immediately. So you're killing 3 birds with 1 stone. You're getting the death benefit, you're getting this and all the stuff you guys talk about in training, right? So
Hey, Wentz,
yes.
can you talk about with Guardian how it's they want us to set up the LOA versus the other way it is with the other ones?
Yeah, so that's one of the only things that's different is that so with Guardian, because they're more of a career shop than they are like an independent. They don't cater to the independent channels as much as other companies. So we have with Guardian, we have to set it up as an LOA. So LOA just means that you're assigning the commission, you're allowing the commission to go to the agency, and then the agency is doing the payout. So they just don't allow, they don't have the setup for it, right? It's easier for us, for accounting, it's easier for everybody if we just get you paid directly. But with Guardian, we don't have the ability to do that. So we're working with them right now to you know to get a little more flexibility, but this is a 100+ year old company. It's really hard to get them to make changes. So that's the only thing with Guardian. The one thing we are getting though, the reason why we're obviously even selling their product is because it's an amazing product, right? So that's the only thing is that we won't be able to get you set up like the other carriers, at least not yet. But yeah, that's all that means. All that means is you're assigning the commission, right? But you have an agreement with us, so it's kind of the same thing, just one more step. They pay us and then we pay out to the agents.
And the good news is we recently changed all of our banking, so we don't have to send you guys dinosaur checks in the mail anymore. So when you do get paid from us, we're sending you an ACH, which happens and comes through immediately. The other thing is that as of yesterday, Arno is going to set me and Maritza up, and they're already coming through with every single possible participating whole life carrier out there to see if there is a few products that are comparable to Guardians, but that possibly pay better or even a little bit easier. So on our end, as a leadership team, we are still going out there and trying to find better carriers, even if it's comparable, that pays more and pays quicker and more efficiently. So just know on that, that's what we're working on right now.
Yep. So that's the only thing. So I would say, you know, if you haven't seen an illustration for Guardian, I always do this. I do side-by-side comparisons. You know, that's one of my things. I always do side-by-side pros and cons, right? And the only con is that extra step, you know, as an agency for us, a little more work, but that's okay, right? If we're doing right by the client, you get a ton of referrals. So not a big deal. So any questions? I'll take some questions. I know there's going to be questions, so you can't text Mario after or Maritza.
Nobody has questions.
I do. Is the executive strategy on here? I only see L65, 95, and L21.
You know what? I think it falls into one of these categories. It's just not on here. I believe it's up here. We'll add it on to this and you guys will get it. But I'm pretty sure that's up here because it's in the table 1, right, Maritza?
Yes. So executive strategies pay, yes, table 1, but it pays out 15% forever.
Right.
As long as the client keeps the policy, you get 15% every single year of the total premium amount that year.
Got it. So then it's not going to be, it's going to be in a separate line. So you'll see it separate, Patty. Yeah. And that's the reason why, it's because of the access. Just remember, less commission equals more access to the money for the client.
Mm-hmm.
That's basically what it comes down to.
Correct.
So yeah, we'll add it on here, down here somewhere for executive strategies.
Mm-hmm.
And that is an easy, if you have business clients, business contacts, that's an easy product to sell for the right client, obviously.
Yeah.
Hint, Patty, hint.
Yeah, I know exactly who you're talking about.
So, what else, Mario? What am I forgetting?
I think I'll just finish off with annuities. Take about 5 minutes, but any other questions regarding any of the life products, guys?
This is Isabel. I'm driving and it's kind of hard to see on the screen, but will this be on the shared drive?
Yes.
Yeah,
Awesome,
there's
thank you.
one there now, but it's not updated with the Guardian stuff. So we'll have this out updated before
Yeah.
the end of the day. All right, guys. So real quick, let me just touch on annuities. Annuities is fairly simple. So for the most part, we write. I'm not sure when. Do we have annuities on here?
Yeah, it's on here. It's at the bottom.
Can you scroll to it just because I don't? There we
Right
go.
there.
Yeah. So if we go to the bottom, for the most part, we're using F and G. You can see that we have AIG, LSW, which is NLG as well. But what you're going to look at, guys, is so if let's say you did Power Accumulator 10, right? So let's see here. 5.5. I don't know. I think we need to take a look at this once. Because for what we do or what we've known is we pay 6% street, right? So it's 6% total. And then if you're making 100%, for instance, right,
Correct.
you would make 100% of 6%.
Correct.
Then if you were making 90, you'd make 90% of 6%, right?
Correct.
85% of 6%. So I think we need to adjust that.
We need to add a
but-
column. We need to add a column. Yeah.
Oh, okay. Because they pay us. So like, let's say it was $100,000. Okay, simple. And I know for a fact on a Power Accumulator 10, they pay us 8%. Okay, so that would be $8,000. Okay, that would come to the company. Then what happens is we pay 6 to the field, right? But that 6% is based on the percentage that you earn. So if you made 90, you'd make 90% of that 6%, and we'd send you the check that way. Now, the way that APIM has all of their annuities set up, it's all LOA, which means that it comes to us, and then we send you the ACH. But it's pretty straightforward, pretty simple. I know that the street right now on annuities is about 5 to 5.5, right? So we put it at a 6%, and we got that information from at that point it was ARA, but now it's Arno. When we set that 6 points, we wanted to make sure that you were going to make more money here with the annuities than anywhere else. So most people are paying 5 to 5.5. We're paying 6% on that. The only other one thing that I want you guys to know is that our accounting person basically totals up payouts basically every 2 weeks at the end of the month, right? Whether that's the 30th or the 1st and the 15th. Okay. So if you guys were to get an annuity payout, we don't really like, let's say it's the 3rd or the 4th of the month, and I've already sent out the payouts and it hits on the 3rd or the 4th. We won't even take a look at it until the 15th. Now, that's not to say that we can't get it to you guys. So let's say, Eddie's account, his commission hits on the 4th. We've already sent everything out on the 1st. And he's like, man, I really need that money. I can't wait until the 15th. Just shoot me a text. Okay. Just shoot me a text. Say, hey, Mario, it says that one of my annuities hit. Would you guys do me a huge favor and take a look at it right now? Because I really need it. No problem. We'll do that. If it doesn't matter, you're like, okay, I know you'll send it when you send it, then that's that. It'll come on the 15th or the 1st. Okay. Any questions on the annuity breakdowns?
You're about to get a bunch of texts on the 5th.
I know, right? Actually, right when I said that, I was like, shoot, when we get to like 40 agents, it's going to be like, hey, Mario, hey, Mario, hey, Mario. Like, nobody's going to want to wait to the 15th.
At that point, we can adjust it. We can do weeklies. That's not a big deal. It's just,
Yeah.
It's just more efficient, but yeah.
Any questions on that, guys? No? Awesome. So like Maritza always says, when she says, are there questions? And nobody says anything, she goes, so you could teach this right now? I love when she does that. Maritza, is there anything that you'd like to chime in with? Anything that we're missing?
No, it's, just at the executive strategies, because we do have a lot of those that we're about to close on, but that's it. That's pretty much it. I think everybody understands, I hope, since nobody has questions, right? But no, I have nothing else to add.
Awesome. So going once, going twice. Any other questions, guys? We good? All right. So guys, I would like to thank you guys for being on today. As always, we are here and it's cool to have all three of our executives here today. That doesn't happen very often, but so Wences, thank you for being here. Maritza as well. But guys, I want to tell you that I love these two, trust them immensely, guys. And everything that we do here at Finline is to help you guys. Okay. I can say this with certainty, Wences and Maritza or myself, we're not here to try to feed ourselves in spite of you and try to take advantage. We want to do everything to help you guys to be successful. And I think our compensation, what they always say, follow the money. Our compensation proves that. Okay. You guys have the most amount of money here possible than anywhere else in the industry with the best opportunity, guys. So that's all we've got. God bless you guys. And we'll see you soon. Bye-bye.